Good morning, everyone. Sorry about that. We had a minor technical hiccup.
It was Todd. It wasn't me this time.
it was a little glitch over the internet. We got kicked out of the system, so we had to log back in. All right, sorry about that. It's March 10th, and this is Nadex Morning Analysis. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple, my good friend Brian Caprice. And we are going to talk about hot spots in the markets today. And we do have some things moving after some inflation data comes out in the United States. But before we jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So the news today, CPI numbers in the US, inflation, core inflation came in a little lower than expected. Here, I'm going to go ahead and flip this over. And the inflation rate year over year hit 1.7%. We are seeing some inflation, a little bit, not a lot, not way more than what people were expecting, but it is having an immediate impact in gold. We talk about this frequently, that gold is a proxy for inflation. When you see inflation, you see the price of gold rise. We are seeing gold spike immediately. So we'll go to the other story next. Let's just talk about inflation right now and gold a little bit, Brian, and then we'll
Sure.
we'll take a look at the other stuff.
Yeah, I mean, obviously the expectation was a little bit off. Actually, one of the articles over here really talks about it and breaks it down. And it's important to understand kind of a bit more of this. So, year over year, we're talking about 1.7% inflation. And, Todd, as you mentioned, you're like, oh, we're seeing inflation. Technically, the mandate of the Fed is to have 2%. So they are underperforming what they need for inflation. And that's probably why we're seeing some, kind of gold kind of bouncing up right now and kind of going back and forth. But looking at it kind of at a bird's eye view, you can see the month over month, 4 versus 4, exactly as expected. So the market really kind of had that priced in. Year over year, 1.7 versus 1.7. Again, expected, no surprise. Market has it in there. Again, it's below what the Fed is requiring for what's considered healthy growth in the economy. Core came in less than expected. And again, that's not necessarily something we like to see. Core year over year is only 1.3 versus 1.4. Now, you may say, how do we have this 1.7, but it's 1.4? Well, in the article, they talk about it. The gasoline index continued to increase, rising 6.4% in February and accounting for over half of the seasonally adjusted increase in all these items. So even though they're underperforming, they know exactly where it's coming from. Half of the increases in inflation is coming directly from gasoline and oil. So everything is really kind of combined together. Now, as far as what the gold chart looks like, yesterday we talked about 1720 being an area. If we were able to get a clean break up to that 1725, which, yeah, not a clean break, it really were just pulled back and kind of went to that same level that we had talked about, that area of interest where we had the 4 breaks before it busted through the top. Now it came back down and grabbed some more orders. Now, what's interesting about this position is if you look to see really where this one started this morning, it was about 6:30 in the morning, gold started to rise. And you can see the initial response to this was immediate punch forward. Why? Oh, there's inflation coming in. But then when you start to digest it a little bit more and the initial kind of jerk reaction is out, again, you can see that it's not quite as good as what we really need, what they're trying to achieve. And we talk about when interest rates will rise to curb inflation. Now you understand why we're not seeing any talk really whatsoever about that curbing inflation, because it's not there. They're mandated to do 2%. That's what their goal is. At 1.7, it's not there. And having it all come from gasoline, as we know, rising gasoline costs is actually not good for the economy. So it's kind of one of those battling back and forth. I would still say, again, I would expect it to kind of bounce back and forth as the retail trader comes in and sees that number and says, yay! Because what they do is they look at that and say, hey, it's 0.4. That means it's 0.4 today, and the next month is 0.4, and then next month is
Right.
0.4. And that's not how it works. It's not going to add up to be, 10%, because we're adding this, or 5% because we're adding the 0.4 every month. But again, there will be kind of a bit of a jerk reaction to the top side a bit today. But what I would do is I would go back to the same areas we talked about. I mean, obviously 1720 is out now. And if you look at it, 1, 2, 3, hit number 4 is what finally blew through the 1720 area. The 1725 is still in play. The last time we were there, we had a very, very strong movement in price to the downside, as well as a little bit of a backstop right above it. So I would say it's a level on top of a level. The big question is, do we come up and spike, or do we come up and roll? Do we come up and stabilize? Up in that 25 to 1730 range is an area that we need to watch out for. And I was told by a little birdie that if you draw some fibs on here as well, this is actually also running into a fib level, depending on how you draw your Fibonacci, because there is multiple ways that you can draw it. So I'd look in that zone.
All right, I'm just going to bring this up over on the Nadex platform quickly. And I'm looking at the binary options. Again, when there's going to be some volatility, although we could jump over and maybe take a look at some knockouts or call spreads in gold. I actually had that 1720-ish level up on the charts yesterday, and it hit it, rolled over, went sideways, and here's this emotional spike up this morning on the inflation data. And really what we're looking at, and I think Brian hit the nail on the head, is how do people ultimately digest this when all that inflation is coming in from the price of oil? In fact, I think we should probably take a look at oil next, because oil has been going through the roof. That is what's driving those inflation numbers. It's kind of hit this. If I actually, let me just go ahead and pull this out. You can see it went through this level. Is it going to roll over from here? The 1725 is just up above. Maybe it's and there's, again, take a look at some of these. If it's going to roll over, it gets up here and there's opportunities, and you're looking for a rollover. You can play these binaries from the short side. I just thought I'd just take a look at, just quickly, let's just take a look at our call spreads in gold.
And don't forget too, just a word of warning, in 7 minutes is when the House is supposed to vote on the stimulus package. So again, that should be also a little bit of a driving force now that there's money coming out.
And that could push this a little bit higher, right? If people go, okay, it's finally here. Gold, if you wanted to play it, I guess there's some call spreads in here if you wanted to play it from the long side or from the short side. I guess you'd have to really kind of take a look. It's not really hitting the ranges too perfectly. Anyhow, I thought just wanted to take a look. I mean, there's different ways to play this gold over at Nadex, either using a call spread or a knockout, or personally, I like the binaries, particularly if it's going to be moving around and showing some volatility. Actually, you know what?
I will point out, I would say, as far as using the binaries and things like that, next Tuesday, guys, if you don't know, again, this is going to be a shameless plug. Next Tuesday, we're doing a special education event. This is a perfect example of how you're able to trade this, especially if you expected inflation to come in and pop. For those of you that don't know, right now, the 2-hour binaries, the 8 to 10, has a strike width of 3, right? Well, this is a spike of 1712 all the way up to 1724, so 12. So that was 4 strike prices in less than 5 minutes that it was able to cover. So again, you guys will get a hint. If you guys are not registered for that, register for it. I'm going to mention how to use the shorter duration binaries to trade news exactly like this.
So, and I wanted to bring this up on the chart, and this is exactly what Brian's talking about. These are those shorter duration binary options. Inflation data is coming out. We're not quite sure what's going to happen, and there wasn't 1, 2, 3, 4 binary options. It went right through them. I mean, and the thing was,
like butter.
Yeah, you could have bought one of these and then liquidated. Again, you don't have to wait, right? You do not have to wait until expiration to see what happens. You can, and you can see all these are either going to go to 0 or 100, but you can always trade out of them. If you.
And again, there's also a call spread at 1710 at that same level. So multiple ways to play it.
Yeah, multiple ways to play it over at Nadex. But gold is definitely one to watch today, as everyone's going to be talking about inflation. Now, the driver of that inflation, Brian, let's talk a little bit about oil.
Yeah, we got to talk about it.
We have to, right?
Yeah, so yesterday we watched oil continue to diminish in price, and we mentioned yesterday the 5 different levels. And again, when I drew these lines, if you guys attended yesterday's noon session, when I drew the lines, you can see that it bounced. Every time it came down, it hit another one of these levels down here on these pullbacks. And we mentioned we had a level here, and we were looking for a continued collapse, potentially back down in the low 60s. But we needed to get that clean entry, right? We needed a break below that level, because we had seen buyers step in there in the past. We needed a clean break, a base, and then a pullback. And it didn't. It literally just peeked its head out, grabbed all the support and resistance traders, stopped them out immediately, and then drove back higher. Now, what's interesting about this is a lot of this rally actually occurred starting at 3 o'clock this morning. And if you don't know what that is the UK session open. If you think that this looks familiar, this is exactly what we saw last week, was a large move in price up over $1.10 starting from the European session. Now, if you guys remember what we saw last week for oil, we had a forecast of minus 1.3 million barrels. And the actual came in at 21. It was a huge miss. Now, with that being said, I have one of my students that he lives in Texas. He's all over oil. He actually kind of copies and pastes for me each week. But the American Petroleum Institute, it's one of the two kind of bodies that reports. They're saying, according to their estimates, there's a 12 million barrel surplus this week. So again, a potential for another huge miss. And we're seeing the same story play out again, where there's a huge surplus, and this is exactly what happened last time. Huge miss, but in the European session, we watch prices driving up. So it's kind of history of repeating itself. The question is, are people going to care again? Are we going to see a continued rally in price up if we get even remotely close to the 12? Remember, the API and the EIA are different organizations, and they do track it slightly differently. But the preliminary report we have for oil is going to be a bigger surplus this week. So again, could that lead us to a pop to the 65.90, 66.19? It absolutely could, without a doubt. And again, that's the last level up top where we've seen massive sellers really stepping in to drive to the downside. Or will this week finally the speculators not be able to kind of maintain? Will we come down and break and then take a short below 63.35? Those are kind of two scenarios I have set up.
All right. No, that's fantastic. So, I mean, we talked about the inflation numbers, gold, a lot of that being driven by oil. Needed to take a look over at oil. The other story that we wanted to talk about is tomorrow, the European Central Bank is going to have their interest rate decision. So, and if you've been looking, and what I'd like to do is let's take a look at the euro has been weak. We've watched the euro getting hit, the euro pound definitely in a downtrend. The euro US dollar definitely in a downtrend, although it caught a little bit of a bottom. So
there's on a daily.
Yeah. So I mean, there's the I mean, you could see how the euro US dollar it's just it's gone.
It's really pushing this way.
It's getting pushed down. And the in fact here just for a quick second, here's the chart of the euro pound. I mean, we're seeing the same thing. Euro getting hit. A lot of euro weakness, but they are coming out with their interest rate decision tomorrow. So I don't know, Brian, do we want to talk, do a little bit of on one of the something about the euro?
Yeah, so I think the important thing to talk about here is, again, they're already at zero. There's no such thing as a rate cut. One of the things that I brought up yesterday that I feel is worth repeating again, and you can see right now in 24 hours, there's really been no movement whatsoever. It's about 20 pips across the board. No news tends to be good news when it's in, kind of in this pandemic situation, right? Now you've seen things, we face 3 or 4 more months of a difficult pandemic. A lot of the news that's coming out talking about Germany doing additional lockdowns and this person doing this and this person doing this. So there's a lot out there still that's negative. And think about the situation that they're in, right? The European Union is not just one member state. There's a lot of member states. There's a lot of different policies. There's a lot of different people. There's a lot of different rules. There's a lot of different vaccine schedules to come out with. There's a lot of different funding that's needed to manage all those multiple states versus something like the pound. You brought up the euro pound, and I think that's a great example. The pound doesn't have much, right? There's no economic news this week. There's going to be headlines here and there, but for the most part, they're kind of protected this week. They got that bulletproof vest on by not being in the news whatsoever, right? The euro having this news, their monetary policy statement is going to talk about what recovery is looking like, other additional measures they're looking to put in. We're passing stimulus. Is their stimulus going to match what our stimulus is? So really, at the end of the day, looking at this statement, it is at 7:45 a.m. tomorrow Eastern. With the press conference right after that one, I think tomorrow morning the play is going to be the euro dollar. And unfortunately, it'd be right before we get in there, so there may be some massive movement. But ways that I would look to play this is, again, the European session open. I know it's early. People don't like that one, but there should be some decent movement there. And then again, right around this time frame when the U.S. trader is stepping in, there could also be a massive amounts of movement. If they talk about continuing to support businesses, the recovery going slower than expected, anything negative, again, that euro dollar continues to drop to the downside. Euro pound in particular, I think, is the biggest one out there because we have seen continued pound strength where we've seen dollar strength, dollar weakness, dollar strength, dollar weakness. where we've seen just pound getting stronger, 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 stronger. So a couple different setups I think are going to be in play for tomorrow as far as those go.
So there you have it. I just really wanted to tee that up. We again, you can see the euro US dollar. It's clearly been weak. It did catch a little bit of a floor, but expect we're trying to tee you up for this. The euro pound and the euro dollar tomorrow, before Brian and I get on tomorrow morning. You might want to be looking at some potential volatility with the euro moving based upon what comes out of the ECB on their interest rate decision. And again, I'd say probably take a look at the binary options again, a way to do that in a limited risk, limited reward way. And in fact, again, a tee up for next Tuesday. Definitely, if you haven't registered and you'll want to catch Brian's session next Tuesday, you can register on the Nadex website. You go into the learning section, webinars, and you'll see the boot camp up there. But you might want to use one of the shorter duration binaries for tomorrow. Looking at that, versus the daily one that I'm looking at right now. So.
Yeah, I mean, what I would do is after the next contracts print later today is probably going to be the best opportunity. And also keep in mind, we mentioned the euro pound. Euro pound has been going sideways inside of a 4-hour kind of a 4-hour demand level. Remember, when we go sideways inside of a channel, that tends to be where it breaks to go lower or higher. Again, this one came down as basing. Sellers keep kind of pushing it back down again. Buyers are putting up a good fight. Jumping up to a 4-hour, you can see it a little bit better on that one. Yeah, right there. You can see we're literally just riding sideways in this one, which means it's eating up all the buyers that are in this level, right? So any type of negativity whatsoever, potentially short on this one. And again, when the Nadex contracts print later today, we can get a closer proximity to price. It may be more of a call spread type play than a knockout because, again, when it continues to push lower, knockouts tend to be more in the middle, not necessarily the top or bottom, but that's where call spread comes in as well. So call spreads, binaries, I think both of them are great. Look to see how the contracts print tonight.
Okay. With that, actually, I'd like to just do a quick little recap.
So much to talk about.
No,
so little.
I know. So much to talk about, so little time. Inflation numbers. The CPI came out in the U.S. Seeing some inflation, but a knee-jerk reaction. Gold popped higher, but as people start digesting it, realizing that a core component, in fact, a super majority of that was actually driven by oil. We looked at oil a bit. Just because we also have some inventory reports coming out today, and then we teed you up for tomorrow. Keep an eye on that euro with the ECB interest rate decision early tomorrow morning U.S. time. With that, Brian, is there anything else that you wanted to point out before we let everyone send them along their way and let them get ready for the U.S. Open in 26 minutes?
No, just if you haven't got registered for next Tuesday, definitely do it. I think there's going to be some good stuff. And again, it's more focused on day trading for those of you out there that are new to this.
So awesome. Questions for Nadex? Email us, customerservice@nadex.com. Questions for Brian. He is definitely accessible, loves to interact with you guys. You can email him, support@keeptradingsimple.com. With that, I think we kind of teed you up with some great hot spots to look at today. And want to wish everyone good luck in the markets today, and we will catch you again tomorrow morning. Thanks, everyone.